All right, let's jump right in. If you've even started to think about retirement, you've probably heard the word annuity thrown around. It's one of those things that pops up all the time, but honestly, it can be super confusing. Is it an investment? Is it something else entirely? Well, today, we're going to clear all that up.
And this is the question everyone asks first, right? You've got your retirement savings and you want to know if an annuity is a smart place to put that money to make it grow. It's a totally logical question, but it might just be the wrong one to be asking in the first place.
And here is why. The absolute most important thing you need to grasp about annuities is that they are not designed to be investments like we think of stocks or mutual funds. Nope, they are a completely different animal.
See, at its very core, an annuity is an insurance product. You're making a contract with an insurance company. The main goal isn't to shoot for the moon and get massive returns. It's about creating a steady, reliable income stream and, this is key, protecting the money you've already worked so hard to save. This, right here, really gets to the heart of it. With a traditional investment, like a stock, you're taking on more risk because you're hoping for that high growth. But with an annuity, you are intentionally trading away some of that high growth potential in exchange for income and safety. They're just two different tools for two very different jobs.
So, if you're giving up some of that potential growth, what are you getting back? What's the trade-off? Well, this is where we get to the real appeal of an annuity. It's all about the promise of security for your retirement.
And what does that security actually look like? Well, for starters, it means predictable, guaranteed income, often for the rest of your life. Can't outlive it. Second, a lot of annuities give you principal protection, which means your nest egg is safe from those scary market drops. And third, your money gets to grow tax-deferred, which is always a nice bonus. I absolutely love this way of putting it because it just makes so much sense. You're basically giving an insurance company a lump sum of your money, and in return, they send you a check every single month like clockwork. It's a way to take the guesswork out of your retirement income.
But, and you knew there was a but, right? Of course, those guarantees are not free. For everything you gain in security, you do have to give something up. So it's absolutely crucial to understand the trade-offs before you even think about making a decision.
So what are the downsides? Well, for one, your money is often tied up for a while, meaning you don't have easy access to it. That's the lack of liquidity. And like we've said, you're generally looking at lower growth potential compared to pure investments. And finally, these are pretty complex contracts, and they come with costs and fees that pay for all those guarantees they're promising you. It's also really important to note that annuity is a pretty broad term. A fixed annuity is super low risk. It's all about safety and steady, predictable returns. A variable annuity, on the other hand, actually lets you invest in market funds, so you have a shot at higher growth, but you also take on market risk. They're really built for different comfort levels. Which, of course, brings us all the way back to you. Now that we've kind of reframed the whole thing, not as, is it a good investment, but is it the right insurance product? How do you decide if it actually fits into your plan?
The path to a decision really comes down to 3 steps. First, what are you actually trying to do in retirement? What's the goal? Second, how much risk can you stomach? Are you a conservative person or not? And maybe most importantly, do you need a guaranteed stream of income that you absolutely, positively cannot outlive?
At the end of the day, an annuity isn't good or bad. It's just a tool. It's a specific tool for a very specific job. For someone who values that safety and that guaranteed paycheck more than anything else, yeah, it can be a fantastic fit. But for someone else who's focused only on maximum growth and is fine with market risk, it probably isn't the right move.
So I'll just leave you with this one question to think about. This whole decision really boils down to this. As you plan for your future, what do you truly value more? Is it the potential for higher growth with all the risks that come with it? Or is it the certainty of predictable guarantees? Your answer to that question will tell you everything you need to know.